What's going on, guys? So coming right up in this video, we'll be looking at the stock market performance for the previous week. We'll also look at Google's parent company Alphabet setting a new record. We'll also look at the US-China Phase 1 trade deal. We'll also look at upcoming earnings report for different companies for this upcoming week. We'll also look at this article from Yahoo Finance on why 42% of people are choosing to stay away from the US stock market. All right, so all of this coming right up. Okay, guys, so before we get to the news portion of this video, let's do a quick analysis of the stocks market performance for this previous week. As you can see on the chart at the moment, we've maintained the upward trend. The upward trend is still continuing at the moment. Last week we ended the previous week. We ended the week on January 10th, and then since then we've gone up about 2%. We had the trade deal on Wednesday, and then as you can see from here, we've had that boosted the market up even more, and then we were able to push 2% up in the stock market for this previous week. All right, let's look at the weekly chart. The weekly chart still looks bullish. The trend line, this trend line that has been supporting us since 2009, has not been broken still. We've dipped below it multiple times. We dipped below it in 2011. We dipped below it in 2016. Yep, 2016. And then we again dipped below it in 2018. But since then, we've been on the total rip. We've not looked back since. We're still up 13% from the highest from the highs in 2018. So the bullish trend still continues for the S&P 500. Let's take a look at Google's parent company, Alphabet, really quick. If you are not aware, Alphabet owns Google, of course. It also owns YouTube. It also owns DeepMind and Waymo, the self-driving car technology company. There are also other companies that Alphabet owns, but I do not remember on top of my head. But then just this previous Thursday, January 16th, Google's parent company, Alphabet, became a $1 trillion company, joining the likes of Microsoft, Apple, and Saudi Aramco as the only $1 trillion companies in the world at the current moment. Amazon was on the list at some moment, but then now is only worth a little bit of a 920 billion. So that takes Amazon off the list of the $1 trillion companies. But then I'm pretty sure it will probably join the list sometime soon. But most of Google's push to the $1 trillion mark, in my eyes, I think is due to the overall bullish movement of the stock market. The stock market is up about 32%, and then Google is up about 40% since the beginning of 2019. Not to take anything away from Google, but then yes, the overall stock market definitely did help that. All right, so that is it for Google. Now let's take a look at the US-China Phase 1 trade deal. So the moment we've been waiting for the US and China to finally agree on a trade deal. And Phase 1 of it just happened just this Wednesday. The US and China, they had to agree to some terms. The Chinese have agreed to increase their purchases of US goods by roughly $200 billion over 2 years. And most of that money is actually going towards the agriculture sector, the manufactured goods sector, the energy sector, and then the financial sectors. So those sectors should definitely see a good amount of growth in the upcoming years. For the next couple of years, for the next 2 years, they should see a good amount of growth. The Chinese have also agreed to strengthen intellectual property protection and also to use criminal penalties for those caught stealing trade secrets. So that should help companies trading in China, and then this should help America as a whole. Since that news came out on Wednesday, the stock market has seen a good amount of growth since then. I think about 1%, a little bit over 1%. Let's take a look. Let's confirm that. So yes, it has seen about 1.5%, exactly 1.41%. So that is good for the market. Now let's jump right into the earnings reports. Let's take a look at companies that have their earnings report coming up this week. So at the moment, you're looking at the earnings calendar. So on Monday, which is MLK's Day, Martin Luther King's Day, we have American Express coming out with their earnings report. We also have Atlassian coming out with their earnings report on Monday. Monday should be a holiday, so I don't think the stock market should be opened. Now let's look at Tuesday. On Tuesday, we have Netflix coming out with their earnings report. We have IBM coming out with their earnings report and Progressive coming out with their earnings report. Netflix might be a good one to play their earnings report. What about Wednesday? Wednesday we have Johnson and Johnson coming out with their earnings report. We have General Dynamics coming out with their earnings report, and Discover also coming out with their earnings report. There are also a whole bunch of other companies, but I don't really know much about them, so I'll probably not even play them. Intel also has their earnings report coming out on Thursday. Comcast on Thursday as well. Texas Instrument, Union Pacific, Lockheed Martin, Starbucks. What else? Yeah, those are the pretty big companies. Travelers also have their earnings report coming out, and then Southwest Airlines, Capital One on Thursday as well. All right, now let's keep over to Friday. Friday we have eBay, we have Raytheon, we have Ericsson. That's a pretty old company, all right. But then okay, so that wraps it up for the earnings report. The companies having the earnings report coming out this week. If I was going to play any of these companies, it'll probably be Netflix or maybe probably Netflix. I've stepped away from swing trading for a pretty long time now, but then okay, I'll get back into it if I do see any favorable deals for me. All right, so let me jump right into the article from Yahoo Finance. At the moment, you're looking at the article from Yahoo Finance, which is titled 42% of people say this is why they are not investing in the stock market. All right, so this article is basically a report on JP Morgan Chase's survey of 1,200 investors and non-investors. And then most of the reasons why people are not investing in the stock market boils down to liquidity. 42% of those investors said they were not investing and they were actively staying away from the stock market because they believe they did not have enough money to invest. That shouldn't be an actual issue because at the current moment, with technology going fast, with fintech companies like Cash App and M1 Finance, you could actually start investing in any company with as little as $1 with Cash App. And then with M1 Finance, you could invest in any company with as little as $10. You could buy fractional shares of any company on M1 Finance. All right. And plus, you also get a $20 bonus if you use my link in the description for M1 Finance. With Cash App, if you use my link in the description, you get a $5 bonus for opening an account with Cash App. I'll also leave my Robinhood account in the description. You can get a free stock that way with Robinhood as well. All right. So let's return back to this article. It says 76% said their living expenses are too high, which is definitely true. The living expenses, especially for millennials, are pretty high at the moment. People getting out of college, those living expenses will go over your head. Secondly, 49% are still paying off a student loan, which is definitely an issue. We have student loans hanging off a lot of people's head at the current moment, which is outrageous at the moment. We are over $1 trillion in student loans. Also, it says 63% said they need at least $1,000 to invest, which I said before. You do not need $1,000 to invest. You could start investing with as little as $1. All right. You could use Cash App. Use my link in the description. You get the ability to invest in any company with only as little as $1. All right. Also, interestingly, the article says millennials are pretty more aggressive with their portfolio, which shouldn't be an issue because millennials are pretty young, and then we could still weather the storm until we hit retirement, where we need to be more. Which we need to play more defensive. But then it says boomers are a lot more confident. So millennials, yes, we might need to slow down with our tech stocks. Millennials, it has been discovered that, through research, that we buy a lot of tech stocks like the Snapchats, the Twitters, the Facebooks, the Microsofts, the Apples. And then, yes, we need to slow down a little bit with the tech stocks. I'm not going to dive more into this article. I'll leave a link in the description if you want to read more about the article. All right, so this is where I'm gonna end it, guys. If you made it this far in this video, make sure to hit the like button. Make sure to hit the subscribe button.